And good afternoon. Welcome into Market Talk on this Friday, January 7th. Thank you for making us part of your day and joining us here once again as we wrap up the first full week of the new year. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com is where you can find us. Facebook, Twitter, Instagram, all of our social media links, all of our streaming sources, news of agriculture, everything. It's on our website at MarketTalkAg.com. Well, it was a wild day in the grain markets here today as we saw a mid-morning turnaround really take hold in soybeans and meal, and that moved us to higher numbers on the day. Let's talk about all of it, and let's say Happy New Year to our good friend Ted Seifried with Zaner Ag Hedge. Ted, hey, it's great to have you back on the show, sir. How you doing?
Yeah, I'm great, Justin. Thanks for having me. Happy New Year to you too, buddy.
Well, I appreciate you making the time to join us here as we wrap up this first full week of the new year. And what a day it was, Ted. Man, just overall, real quick, what are your thoughts on what we saw there mid morning with that big turnaround in beans and meal, and that really pulled everything higher for us?
Yeah, and Jesse, if you don't mind, I want to start with wheat, because wheat started out doing wheat things, but ended up maybe not doing as many wheat things by the end of the day. Look, the wheat hasn't been as bullish for the last month and a half, 2 months, really. So it's sort of been the wet blanket on markets. It's tried throughout the week to really pull corn and soybeans down. But wheat was on a technical mission to go and find that 200-day moving average, which is also in line with the longer term upward trend line that we've been in. And we accomplished that mission early Friday morning. We held the 200-day moving average, and we were able to bounce off that, and we actually had a fairly decent close. Now, we didn't close above Thursday's high. That would have been a bigger win for the wheat if we had done that. We didn't. Either way, it was a good day for the wheat. We're going to see if we can follow through the upside after that bounce off of very, very key support early next week. If the row crops are higher, I think it will continue to try to bounce back into the middle of that trending channel range. But that allowed for the strength in corn and wheat or corn and beans to kind of fester a little bit. And then, like you said, that midday, soybeans started out lower on the day and kind of crept their way back throughout the day, but then we were just sort of, hanging out. But right there when that midday South American weather forecast came out, a little bit hotter, a little bit drier. Oh boy, meal and beans just really kind of took off, and we held that strength really into the close there on Friday. We didn't close at the high, but within a few cents, which is you expect to see a bit of profit taking after a week like this, a day like this, going into a weekend in a weather market where that forecast could change dramatically between now and Sunday. So, I think the close there was a very strong close for beans, good close for wheat. I'd like to see more out of corn. You and I have talked, off camera about, I think corn, which I believe has really been held back by wheat, but I think corn might end up being the bigger story here. I think, you look at the damage that's being done to soybeans down in South America. Well, there's damage being done to the corn crop as well. And as I've said a few times in the past, we've talked about it. I'm worried about that second season Brazilian corn crop. I mean, we talk about high input costs. Well, that's sort of an afterthought for them. That corn crop, that second season corn crop is kind of an afterthought for them. They're focused on their main season of beans, and those areas are actually doing really well on their soybeans. So are they really going to want to push those corn acres? Are they really going to want to push the inputs on those corn acres that they do plant? And ultimately, I think they're set up to have production quite a bit less than what the USDA is saying between the problems with the first season crop and, again, I think lack of interest of really pushing that second season crop. So you take a big chunk out of the corn production down in South America, a big chunk out of the global production of corn, and all of a sudden I feel like we're going to see a pretty decent uptick in our exports. And I honestly don't think our corn carryover is really that robust. You look at what basis was doing at the end of last year, all through December. Yes, basis softened a little bit after the first of the year because guys that had been waiting to sell, that didn't want to compound to their tax problem, those floodgates kind of opened a little bit after the first of the year. But I think that's temporary. It doesn't seem to me, Jesse, that there is as much corn out there as what the USDA had been saying for. I don't know if it's old crop ending stocks. That's the one I most suspect, or last year's production numbers. We're going to see a lot more about that on this Wednesday report. But basis, being as strong as it was at the time at the end of the year, end of the calendar year, right after harvest, and also being as strong as it was at these prices, really suggesting that maybe there's not as much corn out there. So if that's the case, and there's not as much corn down in South America, and corn's going to have to fight for acreage here on top of everything, uh, I think the upside potential in corn is explosive. But the trade so far has been watching soybeans. I don't know, just keep an eye on corn. It might take more of a leadership role here at some point in the relatively near future.
Lot to unpack there. I'm going to back up just real quick to where you started with wheat. You mentioned that 200-day moving average. Do you think we found a bottom in wheat at the 200-day moving average, or do you think there's still a little more room to the downside to keep us competitive on the world market, Ted?
I'll say this: if we haven't found a bottom in wheat, then I think that bottom could be quite a bit lower than where we are at now. We're going to try to put a bottom in wheat. And as I said earlier, I would have felt more comfortable saying, yes, we did, if we'd have been able to close over Thursday's high, because that type of reversal would have been really nice to see coming off of that such a major support level. But I do think we're going to try to put this bottom in. And again, I think it's really going to lay on the shoulders of the row crops. If the row crops are able to continue to go higher, which at this point I think they will, again, ask me again Sunday after looking at that South American forecast. But if the row crops continue to go higher, I think wheat is going to do a better job of following rather than what we saw earlier in the week, because wheat really did have a mission to go and test that support. So regardless of what the row crops were doing or what the wheat fundamentals were, it was being technically driven. Now that technical mission has been accomplished, I think wheat is in a better position to try to follow the row crops higher. And again, that's dependent on the row crops going higher. But if they do, I think wheat will bounce back. I don't have a reason for wheat to go make new highs, but I think we can have a fairly significant bounce back towards those highs again.
Now, looking at that South American weather, and I know that's been one of the big drivers here this week, as you've alluded to. We've talked about it all week long. Looking at that forecast and just looking at some of the lower estimates we've got now in the last couple of days from different folks throughout the industry, one has to wonder, will these numbers come to fruition that are being forecasted lower? And we got that USDA report next week. Will we see a big lower number from them? We know the January report, there's surprises. What are your thoughts looking ahead to that report next week and just where those production numbers are starting to trickle in for South America?
Yeah, Jesse, this January report, or better off saying reports, right? I mean, every single number that we look at has a possibility of changing on this report. Last year's production, last year's carryover, this year's demand, this year's carryover, South American production, winter wheat seedings, every number. So a lot of people say this is the biggest report of the year. It certainly is in terms of data, just raw data. Like it's going to take a while to kind of chew through this report. It'd be great if we had this report while the market was closed, in my opinion. But as far as South American production is concerned, and as far as the numbers that we saw earlier in the week, you look at the average trade guesses for this report, and they're not lining up with the bigger drops that we saw from the private analysts earlier in the week. I think even those analysts aren't looking for the USDA to do that on this report. Very likely the USDA will not do that. And could those numbers be right? Yeah, they could be. For my money, it's a little bit too early to be dropping 10 million metric tons off of Brazilian soybean production. We know, as we've seen really the last two growing seasons here in our country, you get those late season rains, even if the beans have looked really ragged throughout the growing season. You get those late season rains, and all of a sudden you're looking at a pretty darn good bean crop. So I'm 2 or 3 weeks away from really nailing the coffin in, or putting the nail in the coffin on the Southern Brazil bean crop. But I think those numbers are possible. In fact, they could get even a little bit worse. I just think it's a little early to say that for sure. So that's my 2 cents. I don't think you'll see that on the USDA report. But like you said, maybe the USDA is seeing something. Maybe they're feeling more aggressive than I am at this point in time. Like you said, there can be a ton of surprises on this report here. But since we're on the topic of the report, I think the biggest surprises could come from the quarterly grain stocks numbers, like we were talking about. Basis really strong. When we had multiple reasons for that basis not to be strong, it was. So to me, that says maybe there wasn't as much grain out there, corn, beans, both of them. So what if quarterly grain stocks shows, much lighter than expected? That has a trickle down effect to, really, it gives you reason to think that like feed demand is stronger for corn than what we had been thinking. So might make you want to change that on a balance sheet. But even if not, it trickles down to new crop ending stocks, because I don't think you can really do a whole lot on the demand side of the equation for corn. But there too, I mean, again, like I said, every single number we look at, we'll have to see what the USDA says. But personally, I'm not changing much on the corn demand side of things. Um, I think exports, I don't have enough information at this point on export shipments to say that we can't hit the USDA's target. The shipment number is lagging behind, but the sales number is on target. And with what's going on, well, we're within the realm. And then with what's going on down in South America, I would be, I think, foolish to say that our exports couldn't really pick up in corn if there was a problem there. So I wouldn't really change a thing. If anything, I may be increasing ethanol a little bit. So, if we have lower ending stocks or old crop ending stocks or lower production from last year's crop, usually the USDA tries to offset lower stocks or lower supply with lower demand. I don't know how they do that here. Maybe they take something token out of exports, but then I'd be worried that I might have to put that right back in for the next month or the following month.
One thought in corn, and Ted, you mentioned that you wish you would have seen more out of corn here today. I'm almost happy with how corn has reacted all week long, literally pretty much doing nothing in face of all these big price swings one way or another we've seen all week. It feels like corn has just felt content to sit around $6 saying, you know what, we're fine here until we get that big confirmation or that big reason to move higher. What do you think about that thought?
Yeah, so I mean, corn was really caught in between, right? I mean, there's a big tug of war going on all week between soybeans wanting to go higher on South American weather and wheat wanting to go lower, somewhat based on our weather here, but also just like we talked about, that technical objective of going to test that very key support. Once you set off on that path, that technical follow through is more often than not going to happen unless there's a big shock to the market. So in that sort of climate, corn's like, well, I want to try to follow the beans higher based on South African weather, but also, wheat's lower, so that might be cutting into my feed demand. What do I do here? We go sideways, and that's what corn did. But like we talked about, if this was a significant low in wheat, if wheat is able to bounce and be a follower, I think corn has quite a bit of upside potential. I think corn is the one that it's sort of been a sleeper, but that corn might be the one that really, really impresses over the course of the next 2 months. I'm very impressed with what soybeans have done in the last month and a half. But the leader to the upside over the next 2 months might actually be the corn market, which I do also think provides some really interesting reownership opportunities for corn right now. Or from a speculative side of things, if I'm buying one or the other, and I'm talking corn or soybeans, I'm a lot more interested in corn. I think wheat's an interesting proposition too, but I'm a lot more interested in corn than beans on the long side of the market from a speculative point of view. Because again, I think that's, yeah, in my mind, the corn is a powder keg waiting to blow.
I want to touch on livestock here as well. The hog market, we finally had a little bit of a collapse today after a really strong week, but I almost feel like hogs maybe move lower just in the face of the higher bean and meal prices. I mean, what are your thoughts? Would you agree with that, or did you see something else in hogs today?
Yeah, yes and no, Jesse. I certainly think that had a negative effect on it. I think the August contract, for example, needed to have a little bit of a correction out of the strength that we had. I mean, we had been getting very overbought. But if you're going to say meal was the main reason for the break in hogs, then you wouldn't expect that break to be happening in February, right? There was the Feb contract that was down 330 that was really leading the way lower, and that's just really disappointing. Um, and you kind of saw it coming after Thursday. We had really solid export sales off to the races right on the open, but we couldn't hold on to the strength. Yes, we did close positive at the end of the day on Thursday in that Fed hog contract, but barely. And so you knew we were going to be under a little bit of selling pressure there on Friday, but we broke through all the key support points, 50-day, 100-day moving averages, that big cluster moving averages all coming together. It was a really disappointing day. And we can talk about it until we're blue in the face, but the spreads in the hogs they've been bear spreading hogs for a long period of time because the weights are up front. But longer term, we don't have as many animals as we originally thought. Domestic demand is really fairly solid. Export demand has been solid. But that February contract, it might end up being sort of a trigger for a deeper correction for August, potentially, if that Friday, really bigger down day on Friday, if that follows through early next week, that's going to be a problem for the deferred months as well.
How about over in cattle? We've kind of chopped around. We've had weakness here this week, and we ended just kind of with a dud today, kind of choppy and sideways. And looking at cash country, we haven't really had a ton of moves higher. We've been pretty steady. What are your thoughts with cattle to wrap up the week, Ted?
Yeah, I mean, we've backed off the highs. I'm going to throw in your assessment there. Export sales were really quite poor. It was a holiday week, so I don't know how much stock we put into that. But yeah, I feel like cattle are just kind of treading water right now, waiting for the next shoe to drop. We were disappointed. We've been disappointed in cash the last couple of weeks. We feel like there is room for cash to go higher. Packers margins are there. Domestic demand is there. But for the moment, I think we're kind of content to say, okay, let's see what plays out in corn and how that's going to affect feeder cattle. Let's see what cash does. If cash is able to rebound and find some footing, then we have other reasons to kind of ignore the poor export sales week that we had and maybe try to go test those highs again. I think it's somewhat encouraging that we didn't really fall apart there at the end of the week. I thought there was a possibility for that. And if I'm a producer, I'm a little bit nervous of what happens to cattle in the short term. I feel like there is a possibility that Fed fats go and test that 131 level. So I would be, if I'm going to have to be making some sales over the course of the next month to 90 days, month to 60 days, month to 2 months, I'm a little worried about hedging. I might actually, be buying some puts, things like that. But longer term, I don't see a big downward move in the cattle coming. Domestic demand really very strong. Packers margins are good enough that I don't see the big drop in cash coming. And as long as we don't see some big macroeconomic event, I think we've got some pretty solid footing, albeit yes, we could have a correction at some point, and it kind of feels like we're getting to that point because we weren't able to go and make new highs on the last push at highs. So it does look a little bit toppy for now. But again, I don't think a correction would be that deep, and ultimately I think it's a buying opportunity.
Well, Ted, we haven't even touched on the macro markets, the US dollar, energies, crude oil, inflation concerns, et cetera. So before we run out of time, I'll open it up to you. Anything else you're seeing up there in the outside markets we want to pay attention to right now?
Man, we can talk about crude oil and the dollar for a long time. But you know what? With the last few moments I have here, the thing that I want to say about inflation in my book doesn't necessarily mean that corn, soybeans, wheat need to go higher from here. I mean, we're already at some fairly elevated prices. But the thing that I want to drive home about inflation, the inflationary climate that we're in, if we do find ourselves in a need to price ration beans, or I'm really thinking corn at some point, we can go a lot higher than what anybody really expects because it's so much harder to price ration something in an inflationary climate because people are already used to higher prices. The products that we make out of these things, ethanol, cattle or beef, pork, these are already at higher prices. The consumer's willing and sort of jaded to the idea of higher prices. So what's going to slow down demand, right? I mean, it would have to be some pretty shocking numbers for that to happen. So this is the climate that we are coming into a new year where we are already having some South American weather problems, where we've been talking about what our acreage mix might look like. There's a lot of reasons again, corn, I think, is a powder keg. Beans have already started to make their move. If corn starts going along with, beans aren't going to want to give up that acreage. It could be a really, really interesting next few months here, Jesse.
Always full of great knowledge and insight, Ted. And I know if folks need advice and help with their marketing, you and the team there at Zaner can do just that. How can they get a hold of you, Ted?
Yeah, absolutely. You can reach me directly at 312-277-0113. You can also find us on the web at www.zaner, that's ZANER.com. You can read a bit about us. You can also sign up for our morning newsletter. And if Twitter's your thing, I'm also on Twitter. I'm at the Ted Spread. I like to talk about ethanol a lot, mainly because I like to talk about cars a lot. I also like to argue with you about whether a hot dog is a sandwich or not. And I would say Twitter is my more personality side of me. I talk a lot of business. People get to see a lot of that. If you want to see what I'm like in real life, check me out on Twitter.
We appreciate the time as always. Ted Seifried with Zaner Ag Hedge. Thanks for joining us, my friend. Have a great weekend. We'll talk to you again real soon.
Thanks, Jesse. I always enjoy coming on. So talk to you soon, buddy. Thanks.
Ted Seifried with Zaner Ag Hedge, our guest today here on Market Talk. That's going to do it for the show on this Friday, January 7th. Find us at markettalkag.com. I'm Jesse Allen. Have a great weekend.